Good morning once again. This one is called Understanding Level 2. I do realize that many traders out there do not understand what Level 2 is, nor what it is supposed to be used for practically. Okay, there's a difference between theoretical book knowledge and then there's the real world. And I'm going to explain to you how money is made in the real world with Level 2. Some people use Level 2 only. I do not do that. I like all of the odds to be in my favor. And this is how it is done. The Level 2's main purpose is for risk assessment. Once again, risk assessment. We're using a laser platform here. We'll go back to VRSN, which is a NASDAQ stock. It having four identifiers. VRSN let you know that it's a NASDAQ stock versus a three-letter, which is normally a NYSE stock. So here you can see on this side you have the bid, and on this side you have the offer, and you have various numbers twirling around in their myriad of colors. Okay, all this says to you is how much money can I lose if this stock goes the wrong way. Winning trader is concerned with losing. Winning takes care of itself. Okay, here you see you have a good 300 here on INET, 200 on ARCA, and it changes constantly. Here you have 1,000 on INET. So basically, anywhere between, if you're looking for a, I want to say spread, but there's a word for it, when you're losing money and you press the market button. Oh, by the way, we do not use market orders. We use only limit orders. Okay, market orders are what moves the market, and we simply are the gatekeepers from one break to the next. So here you have 49, and there's 15 here, 1,500 on INET. Normally, if INET gets wiped out, the rest of them simply disappear. So INET is extremely important. Or whoever's at the top normally, like ARCA at this particular point. So we could play 500 here and not lose a beat. Obviously this guy is not telling the truth because he had 500, and you look over here and 500 or 600 sold. So he has a lot more than 500, most probably, maybe. So this is, I mean, you can tell what their intentions are, but this Level 2 is not to be used alone. It is to be used in conjunction with a chart, i.e. a chart. So here VRSN jumped up, but it kind of leveled out and then it broke low here and it went down. So our trade is based on the chart, not Level 2 alone. Level 2 is for risk management. It is to figure out how much risk you are willing to take. How many price levels does this stock contain? Here you have 49, 50, 51, 52, 53, 54. This is a pretty decent stock because there's no humongous gaps between 30, 49, and 60 or 80 or something crazy. If we put Google on, you'll see the difference. Let me put Google in here. Okay, voila. 58 cents and 85. 60 cents. That's a 25-cent gap automatically. And Google can easily spread to a $2 gap when it gets ready to do it. So with this, I'm not going to tell you not to scalp this. I'm going to tell you how to scalp this. With a stock like Google, if you can get a reliable pattern happening with Google, and it happens all the time, You do not want to give up on that pattern, because that pattern means someone is buying. But when you have a $3 or $4 or $2 stop loss, then you can't play your regular shares that you would on a 15-cent move or a 30-cent move. You can't play that. You have to make your shares reflect your risk level. So if you only risk $100 per trade, or $50 a trade, or $200 a trade, then you have to scale that. So if you have a stop loss of $2 on Google, which is pretty easy to do these days, surprisingly, like here the high is 57.88 and the low is 5.45. That's almost $2 or so, whatever it is. So if you have $100, I mean, you're looking at $2. You can only afford to play 50 Google, and you'll make the money, because that's how Google moves. And so this is why you don't use the level 2 for very much else than risk assessment. Okay, and I mean, this stock can run 20 and 50 cents out of the way just by thinking about it. So I don't want you to shy away and be afraid of a stock because it has gaps. Do be afraid if it doesn't have a high daily trading volume. There's a difference. And so with Google, it does have a high daily trading volume. It simply has gaps, which means that it has gaps, but someone will be there to be on the other side of your trade. Unlike something that has low daily trading volume or almost no daily trading volume, who's going to buy it back or sell it back to you? That is completely dangerous, and I mean, that's just self-destructive. I don't consider any stock unless it trades 1.2 million shares a day. Some people are good at that. I am not. I like my stocks to have somebody on the other side of that trade that I know is going to be there when I feel like getting out. And so basically, level 2, you want to check the spaces. And so you can say here, this is a very risky stock. Why? Because it has a humongous price difference between the bid and the offer. There's a lot of money can be lost here, so we're not going to play high shares with Google. Here's a 26-cent difference right here. VRSN will go, or the QQQs, whatever you want to look at. Here on the Qs is very tight, 36, 35, 34, 39, 38, 37. No matter what happens here, when you get ready to get out, there's going to be somebody there to take that trade from you, even if you have 50,000 shares almost. So you may wait for a stock like this to make a move if you're doing higher level trades as far as size is concerned, because here you can get out at will with large shares. You do not want to trade 50,000 Google at one time, okay, unless you are an institution and you really know what you're doing. And that is all. Level 2 is designed for risk assessment, and this is how it is done. You look to see if the amount you wish to trade can be handled by the vehicle stock. And if it can, then you say, okay, this is fine. And if it cannot, then you just simply go and find yourself another trade. Thank you.